So, Chris, welcome back to Seoul, and thanks for attending our conference.
Thank you, Peter. Good
Yeah,
to be here.
so, a lot of this is for our KB Securities retail investors. So maybe a quick background on your career. I know it's long and illustrious, and your role right now.
Right. Well, I'm the global equity strategist at Jefferies, but although my full title is global, my long-term speciality has been more Asia. And I suppose I've been writing this Greed and Fear Weekly since 1996,
All right.
focusing primarily on markets and Asian markets. And before that, as a financial journalist, I spent about 10 years at The Economist. And before that, Far Eastern Economic Review, if you remember that.
Oh yeah, long time ago. Yeah, and you have a unique role where you basically look at every asset class, including cryptos.
Yeah. So yes, although they call me an equity strategist, I've always looked at fixed income too. I'm not claiming to be a fixed income specialist, but I'm looking across the asset classes. And yeah, since about 2017, I've been looking at crypto.
Yeah.
Unfortunately, not earlier.
Yeah. Well,
because the easy money was made earlier.
Maybe I remember the call that you made on cryptos, and it was when I remember when J.P. Morgan's Jamie Dimon came out, and the crypto is a Ponzi scheme and it's about to collapse. And you made the very bullish and brave call, saying that you're getting very, very positive. Can you explain?
Well, that's positive on bit. I mean, some parts of crypto may well prove to be Ponzi scheme.
Yeah. But
the fundamental the Bitcoin part, I believe in Bitcoin because there's a real scarcity formula built into Bitcoin. So I think Bitcoin has a role as digital gold. Personally, I've liked gold too. But in my view, there's nothing illogical about owning both gold and Bitcoin.
And they're both doing very well right now.
And the danger of only owning gold, which is like what the baby boomers would own, is that I'm not sure the millennials or the generation below millennials are going to buy gold.
Oh, really?
No, because they're very digitally focused, so they're buying Bitcoin.
Right. Well, there's gold ETFs, right?
There's gold ETFs, but they psychologically, I think you can own both.
Okay.
Well, it's clearly paid. Both gold and Bitcoin are hedges on a long-term US dollar debasement.
Still the case? I mean, so much have changed in terms of how they perceive gold because they think that it's now more speculative and it's, there's incremental new owners from India and China.
Well, no, look, gold I don't know, where's gold today? Gold as we speak is around $3,500 per ounce. So we're right at the at historic high levels. So I put a target on gold back in 2002 at $3,600 per ounce.
Almost there.
We're almost there. Frankly, it should have gone there 10 years ago already.
Okay.
Given the way the central banks in the Western world expanded their balance sheets. But in the short term, we could be near, we either break through 3,500 and go a whole range higher, or we're going to peak short term here and have we're either going to, in my view, consolidate between 3,000 and 3,500, or we're going to go higher here.
Okay.
So if I had leveraged positions in gold, I would.
So relatively, sounds like you're more positive on cryptos relative to gold, even though they moved together recently.
Yeah, well, I'm actually equally. I've got a 50-50 view on that. What's really been moving this year, though, has been gold mining stocks,
right?
Which were underperforming gold and are doing really well in terms of the profits they announce. And you're finally getting gold mining stocks outperforming gold because gold mining stocks right now are in the perfect position. Energy prices are at the low end of the range. They consume energy. And gold's at the top end of the range. So most global investors have not invested in gold mining stocks.
Interesting. So if you were to sell gold, let's say, reaching your target price.
Well, I'm not selling it.
Not selling it.
No. I'm just saying if you have, you might take some profits.
Okay. So if you take profits.
I wouldn't have a leverage position in gold today.
So if you take profit a little bit, what would you buy? globally?
Now, globally, you should be looking for opportunities. In my view, yeah, you should be looking for opportunities. I personally would be buying a bit of Europe. Europe, I
Really?
think, started a long-term outperformance.
Mm.
I don't have one really strong view in the sense is I just want to diverse, because my understanding is most Korean investors are fully involved in the US.
That's right.
So personally, I think those investors should be broadening out. So they
Diversify.
should be diversifying in partly into Europe, partly into China, partly into Japan, and partly into emerging market funds.
So you also made a positive call on China
Yeah.
a while back.
Now, look, China's not a straightforward story, but China's doing okay. But China got really cheap a year ago. It got down to 7-8 times earnings. And I think one should have part of one's portfolio in China because China's in a totally different cycle to everybody else.
Right.
So so to me, it's a diversification in the portfolio. Most of these other markets are kind of trading around the US. India's a good story, but it's all trading around the US. Korea, Taiwan are very linked to the US because of the semiconductor, whereas China's in its own cycle. Yeah, so I would have some money in China.
So since you raised China, they're about to, in the next few months, going to have trade talks with the U.S. I know part of your presentations about, what's going to happen. So can you share?
Well, no, that's obviously completely unpredictable. We have a totally weird situation where most of us at the beginning of this year thought the US and India were very good friends,
Right.
and China was going to get beaten up. But we now have the bizarre situation that India is we're facing 50% tariffs,
You're right.
which is draconian. But China has so far managed Donald Trump very well because China has shown it pays off to stand up to Donald Trump. And it's become clear that the US has no leverage over China on the tariff issue. Whereas Korea, I have to say, Japan, and Europe have been essentially, for want of a better term, groveling to the US president.
Right. We just have to deal with what we have, the hand that we hold, and we don't have many, so.
Yeah, so the problem for Korea and Japan is they're having to do these deals, but as you said in your presentation, it's difficult to do these deals when you have no idea what the ultimate deal is going to be with China. But it may be that Korean and Japanese governments have just made these verbal commitments to invest in America, which are not legally binding, and therefore they've given Donald Trump a win without giving away any real important issues.
Right. So, whenever I speak to some of the investors from China, and ask them about the rally on Chinese equities, they say DeepSeek revelation was the turning point. It really turned the investment sentiment around and also showed to the world that China is not that far behind US on technology. Do you share that view?
No, I think DeepSeek was huge. Yeah, I've got a very simple view. DeepSeek, so since COVID, the most important development first was the Microsoft purchase investment in OpenAI, because that triggered the AI theme to enter the stock market. And then it became clear we were going to get what we call the AI CapEx arms race.
Yeah.
And the interesting point, so I said then own the AI picks and shovels plays.
Yeah.
So actually two of the best AI picks, the three key AI picks and shovels plays to me were obviously NVIDIA in America, TSMC, and the interesting one in Korea was clearly Hynix.
Right.
Because most foreign investors didn't understand that and remained holding Samsung. So we've had that great move in AI CapEx plays, but then beginning of this year, this DeepSeek moment came along, and to me it was very dramatic because the message was that these large language models on which so much money is being invested in could turn out to be commodities. But the other key message was that China was doing it on an open source basis, DeepSeek.
Yeah.
So I think there's a fundamental difference of approach to AI between the US and China. The Chinese approach seems to be to take advantage of this cheap resource called DeepSeek and to try and come up with commercially viable applications in AI, use cases, whereas the US approach seems to be each player is trying to, in their own vertical, build an AI model which leads to what they call AGI, i.e. intelligent machines. Now, someone in China said to me 2 months ago, you know, if it's 8 out of 10, it's good enough for us. We're not trying to build the perfect model. And I'm not an expert on this area, but the discussions I've had told me that many experts in this area do not believe you'll ever reach AGI by scaling up large language models.
Yeah.
So if that's true, a lot of money is going to be wasted.
So China version is more commercial,
I bet
lot
personally,
more
I'd rather,
cost-effective.
yeah, right now, I'd bet on the China version.
Wow, that's a big statement. So, as you know, Korean retailers, investors, they love Mag 7. I know you've covered it over the times. What's your thoughts? And actually, the second question is, you know, you meet so many of the smartest investors in the world. You know, what are they thinking about Mag 7?
Well, I was looking at Mag 7 before, so, because I'm no longer looking at Mag. So before the before the Microsoft purchase of OpenAI initiated this AI trade,
Yeah.
I was thinking the Mag 7 had peaked as a percentage of S&P.
Yeah.
But the moment I saw that that happen, it became clear to me that a whole new thematic would drive this tech space. But to me, the key stocks of no longer Mag 7, it's the 4 hyperscalers and NVIDIA. And those 4 hyperscalers and NVIDIA, when I last checked, were responsible for about 46% of the gains in the S&P since the start of 23.
So can you name the 4?
Well, the 4 hyperscalers are Microsoft, Amazon, what I call Facebook, then I call Meta, and
Alphabet?
or the old Google. Those
Yeah.
are the 4. And those 4 companies are projecting to spend $360 billion US this year. So that means they're going. So the great thing about why these have been fantastic investments the last 15 years is, one, they're global franchises. They're not dependent on the US economy. 2, they were each in their own space, or what fund managers call moats. And 3, they had asset-light models based on scaling up on their platforms, and therefore they generated all this free cash flow.
Yeah.
So that's been the history. That's been fantastic. But this AI thing means, as a practical reality, because they're spending so much money, that they're in the process from moving from asset-light to asset-heavy businesses. So they're going to generate much less free cash flow. But the other very important issue is they're moving out of their moats, and they're basically all converging on the same space, i.e. AI. And they're doing that for 2 reasons, one positive, one negative. The positive is AI is the next big growth opportunity, but the negative is AI has potential to disrupt their businesses.
Yeah.
So the way to look at it, sort of theoretically, they're draining their moats by spending all this money. So my view has been, since this whole story started, that I would rather own the guys being paid for the capex, i.e. NVIDIA,
Data centers?
NVIDIA,
I see.
and here in Korea, Hynix.
Right, okay.
Yeah, because Hynix has got on NVIDIA's business. That's why it's massively outperformed Samsung. And so these companies have done incredibly well. But I'd rather own those stocks. My view is I'd rather own those stocks than the people spending the money.
Yeah.
Because I've got no idea if these hyperscalers are going to monetize their investments. Maybe 2 of them do, maybe 2 of them don't.
Yeah.
But obviously, at some point, when people think they've overinvested, they're going to suddenly the order flow for the semiconductor industry is going to collapse.
Yeah.
But in the long run, the demand for compute's growing.
Right.
So in the long run, I'd rather own NVIDIA and Hynix than the hyperscalers.
But overall, you still positive on the U.S.?
No, I would advise, no, to me, the US has got extreme valuations.
Really? Okay. So
Well, no, I shouldn't say. No, the US, the tech sector has extreme valuations.
Okay.
No, not the rest of the US market.
Okay.
So in a world where the dollar's entered a long-term downtrend, many US companies will profit from that. So that's the good news.
Yeah.
But personally, I don't think it makes sense to have all your equities in the US.
Yeah.
I can show you a chart that the world ex-US, which is what the Americans call the international asset class, MSCI All Country World ex-US has broken out of a trading range. It's been in since 2009. So the rest of the world
Started to
is now
outperform already.
outperforming the US. So I think that's the start of a
So
trend.
that's why you said China, Europe,
Japan.
diversify.
Yeah, but I think if you don't want to do a broad, you can just involve an international ex-US fund. But if you want to hedge your bets, yeah, you can own a European fund, an Indian fund, a Chinese fund, and a Japanese fund.
Right. Yeah. Some of your clients, you know so many of them. What are there's always that sort of very nimble, smart money. Across all asset classes. Can you share some of their views quickly?
Well, no, the fast money, what's happened in the Asia markets this year, obviously, last year, because the big hot market in Asia last 2 years was India.
Yeah.
You were at the Indian conference a year ago, which is when the Indian market peaked.
Yeah.
So at that point, the foreigners were selling India and buying China, which made sense because China bottomed. But what's happened this year is I don't believe foreign investors were positioned for the Korean rally this year.
No, totally unexpected.
Yeah, I think they're completely unpositioned. So
Yeah.
what's been happening in the last few months is foreigners have been selling Indian stocks to buy Korea and also to buy Taiwan.
Taiwan.
Yeah, because people, I would have done the same thing. People reduce Taiwan and the AI plays on DeepSeek. But
So
then-
Taiwan means TSMC, right? Is there anything else we should
well,
care
there are
about?
things in TSMC, but basically from Taiwan in the last 5 years has become the same trade as the S&P.
Yeah.
The correlation is almost 0.9 because the S&P has become big tech, as we just discussed.
Yeah.
And Taiwan has been TSMC. So TSMC, when I last checked, was 55% of the MSCI Taiwan index.
Now, just a couple more questions before I let you go. First of all, the Fed decision. What is your outlook? I mean, at some point when the rate cuts happen with the declining market, which does happen, then there's someone who says, well, they still have room to cut, so we can safely just remain bullish. Is there any risk of them getting into that behind the curve and rate cuts happen?
There is that. So my view on this, obviously there's been massive pressure on unfortunately, Mr. Powell at the Fed to cut rates. That pressure is coming from the Trump administration because they want to get the cost of debt servicing down.
Yeah.
And they finance the federal government with short-term treasury bills. So Fed funds rate goes down 200 basis points. That's a meaningful cut in the debt servicing costs. So in my view, the Fed will cut rates in September unless there's a strong employment number on Friday. Because the Fed has now told us they're going to prioritize employment labor market over inflation.
Right.
So, but in the long run, I think what really matters, let's say we assume the Fed cuts rates, the trillion-dollar question is going to be how the US bond market behaves. Last time they started cutting rates last September, the 10-year bond sold off. Yields went up, not down. So that's the key thing to watch out for. Because structurally, I'm bearish. The key thing your clients definitely do not want to own is G7 government bonds.
Okay.
In my view, G7 government bonds entered a structural bear market in 2020.
Wow.
And yeah, I would much rather own US equities than US Treasury bonds. But all G7 government bonds, I believe, are in bear markets.
And a final question is that I know you and I talked about possibility of launching active ETF. What is your thoughts on and the rationale behind that?
No, well, I think the ETF market is going through a major change, which is obviously most advanced in America, where ETFs began as an index product to promote passive investment, people buying indices. And what you're seeing in the last 2 years in the US, or maybe longer, is a huge surge in active ETFs, which the original one, I think, the original successful one was ARK. So you're getting thematic active ETFs,
That's
either
right.
based on themes or just country ETFs, and these are replacing or active mutual funds. So to me, they're the future of the ETF industry. Is going to be increasingly active.
Well, Koreans love active. They're very thematic, and they're very momentum driven. So, maybe I can persuade you to try to construct an ETF for Korean retail investors at some point.
Right, absolutely.
Yeah.
No, I think active ETFs are the way are really happening. I
Yeah.
don't know, but here in Korea, I think they're more passive, right? Still.
Oh no! I mean, they're increasingly more and more active. They're tired of indexing. They really want a theme, some driver that's easy to understand, and that they feel that it provides them the extra alpha. So, yeah, if you promise to come and visit us regularly, maybe we can talk about it for next conversation.
Brilliant. Yeah.
Thank you, Chris.
Thank
Thanks
you,
for your
Vito.
time. Thanks
Thank you.
for coming.